Tesla just released their earning numbers, which were good, but they did have language in there that talked about supply chain issues that's actually impacting their ability. It was crazy. They also said that they aren't making any new vehicles for 2022. They're just selling what they currently have, which is kind of the reason why Tesla stock has been going down the past few days. It's like, what? No new cars, and y'all talking about making robots. Y'all ain't even finished making cars yet. In today's video, we're going to answer the question, what makes the stock market crash? And we're going to talk about why the stock market is currently terrible and everybody is losing money. I'm losing money, y'all losing money. The crypto market is down. Everything is kind of red across the board. We're going to talk about some of the reasons why. I am a licensed attorney, but I'm not your attorney. So this is not legal, professional advice, financial advice. It's none of that. This is my opinion. This is educational and informative. And I'm letting y'all know what's going on in the household of the debt free dad. So, if any of y'all taking a look at y'all portfolio lately, I don't even look when the stock market is like this red, crypto down, stock market down. I don't look. When everything is green, I look every day. When everything is red all the time, I look maybe once a week, maybe once every couple of weeks because I just don't want to see it. It gives me, it is annoying for me. So I refuse to look. But the stock market has been down for the past 2 or 3 weeks. It's just red day, red day, red day. The Feds have a meeting. Jerome Powell talk. Anytime he open his mouth, that means that we're all going to lose money. And so that's just kind of what it was. So today we're going to dive into some of the reasons why, and I'm going to explain what causes the stock market to decline, what causes the stock market to crash. So let's go ahead, jump to the whiteboard and talk about it. Okay, the first thing we have to do is define the word market. For purposes of this video, market is an arena where there are buyers and sellers, just like the market on the corner store, just like the Amish market where you go get the holistic vegetables. I got my two colors, red and blue. So we have buyers, and we have sellers. Let's put the circles over here to represent those are the sellers. Let's put the blue circles over here to represent the buyers. Essentially, what causes the stock market to go down, something happens, inflation, pandemic, and it creates fear. And people who are in the seller's market, they start to say, hey, we need to go ahead and sell these stocks, get our cash, and put them in investments that are less risky, like maybe property or government bonds. And so these guys are selling, but because everyone's scared, they're getting nervous. You have a flux of buyers who decide to run over here to become sellers. So now you have an imbalance. You have way more sellers than there is buyers. That drives the price of stocks down. It drives the prices of any commodity, stocks, crypto down. Now, you have a couple of people who hanging in the game. Like, that's probably the people who think like me and you, like, hey, let's go ahead and buy the dip. We're going to buy the dip. We're going to buy the dip. And so, buying the dip is when you have a stock at $100 a share, that stock goes to $50 a share. You say, hey, I'm gonna buy when this stock is low. I'm gonna buy this dip. So when it goes back up, hey, I can have a lot of profit. So these guys are still in the game. They're buying the dip. But what happens is because there's so many more sellers over here, the dip has another dip. Typically, when you buy the dip, you wait for that pullback. It's like a slingshot. You wait for that stock price to pull back and then it shoots up higher. Well, when you buy the dip, because there's an influx of sellers over here, the dip has a dip. And so, it's funny. Check out a guy channel. Check out my guy Ty over at Piece of the Pie with Ty. He was actually just talking about this. These guys are still in the game. They think they're buying a dip. The stock never goes up. It continues to go down because there's way more selling pressure. There's more sellers over here. And that's essentially what happens. So what do you think is going to happen? The people who are buying stocks at $50 thought they bought the dip, but it went down to $40. They're not going to want to keep losing money. So now they're going to get apprehensive like, hey, should we be selling? Should we be holding? That's typically what causes the stock market to go down. There's a triggering event. That event creates more selling pressures. There are much more sellers in the marketplace than buyers. The few buyers who remain in the marketplace, they buy the stock when it goes down, waiting for it to go up. But because there's so much selling pressure, the stock goes down and then they get hesitant and don't want to buy. So you have all this pressure pushing over to the seller side. That's what makes the stock market go down. Hey, check out this illustration on the screen. I thought it was funny financial humor, but this is what I meant by when the dip has a dip. Most time, if a stock is at $10 a share, you wait till it go to $7. You say, "Ooh, the price dipped. I'm gonna buy the dip." You buy it at seven, hoping it'll shoot back up. But you buy it at seven, then it goes to five, and you're like, "Damn, I bought the dip." Then the dip dipped on me. And so, check out this illustration. I thought it made sense, but this will really bring you some granularity. You see that? They go to dip, they go the dip to the dip, they go the dip to the dip, and so on. That's just kind of how it is. That is really how things play out when the stock market is going down or crash or it's just bleeding red as it has been for the past few weeks. Now we're going to talk about some of the things that are triggering this red session that we've been seeing for the past few weeks in the stock market. First and foremost, the easiest one is inflation. We all know about inflation. On average, inflation rises at about 3%. The definition of inflation and debt free dadisms is when the price of goods and services increase, you lose purchasing power with your dollar. So inflation is typically 3% a year. It's currently like 7%, which is crazy. Some of the reasons for inflation is because the pandemic, in order to try to stabilize the stock market and economy, the Feds just start printing out money, infusing money into the marketplace. Think about it. If the government gave everybody $1 million, having $1 million wouldn't mean anything. It's kind of that same concept. When you flood money into the marketplace, it decreases the purchasing power of the dollar. So that's kind of one point that we're dealing with. Also, of course, is supply chain issues. Tesla just released their earning numbers, which were good, but they did have language in there that talked about supply chain issues that's actually impacting their ability. It was crazy. They also said that they aren't making any new vehicles for 2022. They're just selling what they currently have, which is kind of the reason why Tesla stock has been going down the past few days. It's like, what? No new cars, and y'all talking about making robots. Y'all ain't even finished making cars yet. And so inflation is definitely one. Supply chain issues is two. The third thing, of course, is the pandemic. You have all these new variants developing. People are getting fearful and nervous. That's a triggering event. And another triggering event that, a lot of people haven't been talking about is this whole Russia Ukraine situation. Right now, US appears to be sending some aid to Ukraine. They don't know if Russia is going to invade Ukraine. But from an energy standpoint, the energy market is going to be really shook right now. And it's creating a lot of fear because Russia controls, like, I want to say either the third or fourth, but Russia is up there with regard to the control of the oil that's dispensed worldwide, and so that's definitely problematic, creating a lot of fear. When fear exceeds consumer confidence, that's pretty much the and that's pretty much the formula for a down market is fear exceeds consumer confidence. Anytime fear exceeds consumer confidence, you're going to get a flood of sellers into the marketplace, which is going to push the price down. Check out a channel, Invest to Live. It's really a great channel. I like watching channels for either the journey, the entertainment, or the accuracy. And he has a really good channel, but he does a really good job of explaining the ecosystem of the stock market. A lot of times you always hear people talk about do your research, and you're only looking at the company. But the ecosystem to stocks is much bigger than the company. The slightest thing that happens in the overall global ecosystem can impact a stock for a positive or a negative. For example, supply chain. You wouldn't even think about supply chain being an issue, but because a company that you hold stock in can't get its goods to the consumer, it can cause sales to decrease, which could cause the price of that stock to plummet. But he does a really good take on identifying those things that you don't think of in the ecosystem that can impact your stock. And he also provides on that channel a weekly look. Every Sunday night is a live that's done on that channel. And they actually kind of give a weekly forecast of big things that are going to happen, earning reports, Fed meetings, things that are going to happen that could impact the market. So the channel is very accurate, informative because he gives you the information up front. So definitely check out Invest to Live. That's it. That's what caused the stock market to go down. That's why the stock market is down. Hey, and if you're still here, check out these videos on the screen. These are more videos related to my family's financial freedom journey and where we're learning and talking about finances. Check them out. Definitely content you'll enjoy.